we was going up, all the way down, structural low, up, down. Structural low was broken. When structural low was broken, if I put it on a line, which is not necessary, I see that structural low was actually broken right here. Now when structural low was broken, structural high was made, and this high did not break the previous high. So what does that mean to me? What type of hope does that bring to me? It brings to me a hope that I'm going low. Why? I'm going down. Why am I going down? Because I'm starting to see lows being broken right there. Now this right here is my structural low. I say structural low right there. And I know for the fact that I'm going to see a retracement then drop. But my retracement could happen here just as much as it could happen anywhere else. But I'm very aware that I'm expecting a retracement then drop. Now, where is the retracement? It's in invalidation now. What's invalidation? The previous high before the lowest low within that structure. If I mark out right here, look at how perfect that looks. Same setup. You keep on seeing it. We're going to talk about these aspects when. How long are these structural lows and structural highs valid? How long are they valid? Because we see a case where price comes back to test that structural high before it actually falls down, which is very valid. I just haven't spoken about it yet in this series. But all of these are models. This is invalidation. And we see price neatly coming here and drop. Structural low. Price comes back to revalidate the structural high. Then drops all the way down. Now, in a situation like this, would look for micros, right? Would look for micros. We see it right here. Drop, up, drop, up, drop, up. Look at how is it broke below this. As it broke below this, comes back to that invalidation, the previous high before the lowest low. Right, this green candle right here. Invalidation. Nice spot for us to enter. Drop all the way. And our targets are simple. These swings. Very simple targets that we are setting right here. We see market price, even this structure, this little micro uptrend right we got here. It's something that we could work with, because we see it break, come back. There is something going on here. Something very nice going on here. If you go to a lower time frame, you would see it properly. All the way up, come back. All the way up, comes back, break. So expectations, because structural low has been broken, and because this is the low, is the lowest before the structural high, I have these candles in consideration. I have this candle in consideration, and my anticipation is that I'm expecting some sort of, or if price happen to come here, I'm expecting it to drop. That's perfect. Nicely. Entries that are nicely structured. Entries that are nicely structured. I'm going to go to a lower time frame just to visit these invalidations and visit these entries. I also want to visit this entry right here with you guys, even though I haven't spoken about it before. It's a structural high that has been retested. Structural high that has been retested. This situation is just as good as instead of this flip zone being retested, a structural high was retested right here. It's exactly what happened here. This situation is what happened right here. A structural high, because this is a high, this is a low, this is a high, this is a low, another high and another low on a macro basis. But something happened within this area of invalidation, which is what we want to just go down and visit, see what's up on the lower time frame. So I'm going to take this area into consideration, and everything else for the sake of neatness down there. We are just going to clear. Now let us drop to a 1 hour time frame, paying a quick visit there. Look at how neat that entry would look like. A pending order could sound very optimum there. Even though it did not get to the low, I don't want to believe that you could take a trade right here, drop all this much, and end up taking a loss. That doesn't sound practical to me. With risk management or with no risk management, that does not sound practical to me at all. So perfect. It's that entry that we visited. If we drop further, let's assume to some 15 minutes, you'd now see that setup, the inverse of that setup that we were looking into in the previous video. If you have not watched the previous video, please do yourself a favor. Now that setup start to show itself. You see, up, up, then we have it break and we have it come back. What's going on here? That perfect zone, which looked exactly similar to the examples that we were having previously. Now we are starting having structure, break, come back, break, come back, break, come back, break, come back, and it starts looking simple. I like doing this on a highest time frame possible, a 4 hour daily, because if I do it on a higher time frame, the entries will look sleek on a lower time frame. There is less noise in higher time frames. Price moves slowly, and I can patiently wait to see what's actually going on. I don't know what's up here. How would look into this? Structural high, a low, high, low. We start having a micro uptrend, but based on this high, this is a lower high all the way down, but did not break a structural low. Have not yet broken a structural low. So in a market like this, there are two things. Either I would not trade, or I'd wait for the micros, right? What's going on in the micros? 1 hour, until I see a clearly defined trend. If I don't see a clearly defined trend, which is either showing me upward interest or downward interest, then I'm out. I'm not trading it. I'm out. I'm not trading it at all. Why? Because it's not showing me upward interest or downward interest. Now, in the next video, we're going to talk about how long structural highs or structural lows hold. So stay tuned.